Hello, everyone. Thank you for joining us today. We're going to get started right on the hour, so thank you for waiting in the meantime. All right, so we're going to go ahead and get started today. So hi, everyone, and on behalf of the Environmental Finance Center Network, welcome to our webinar today on wastewater rate affordability and setting the right rates for your system. My name is Avery Davis from the Syracuse University Environmental Finance Center. Before we begin, we're going to cover a few housekeeping items and then we'll get started. During the webinar today, everyone will be kept on mute to ensure audio quality. If you have a question, please type it into the GoToWebinar question dialog box anytime throughout the session. After the webinar today, you will all receive a follow-up email that includes a link to the recording and other information you may need. You can also download the slides from today in the Handouts tab in your GoToWebinar control panel. This webinar has not been submitted for pre-approval of continuing education credits, but eligible attendees will receive a certificate of attendance for their personal record. To receive a certificate for this session, you must attend for the entire webinar and register and attend individually using your real name and unique email address. Certificates will be sent via email within 30 days of the webinar date. And if you have any questions or need assistance, you can contact us at smallsystems@syr.edu. Now for a little bit about the Environmental Finance Center Network. We provide training and technical assistance to small water and wastewater systems in all U.S. states and territories through our building technical, managerial, and financial capacity programs. If your community or utility needs assistance with drinking water or wastewater system management, please feel free to contact us through our request form, which I will be sharing shortly in the chat. And on that note, I would like to introduce our presenter for today. So with me today is Jason Barrett, who is an associate professor from Mississippi State University Extension Service and Mississippi Water Resources Research Institute. So welcome, Jason, and I'm handing everything over to you.
Thank you, Avery. No doubt. Hey, yeah, as Avery said, Jason Barrett here, Mississippi State University Water Resources Research Institute. For the duration of the presentation, I'll cut my camera off, and that way we can just kind of focus on the session. But before we get started, one of the things that I really wanted to lay out, and for any of y'all that may have heard me talk before, I always like to talk about really the resources that we have out there. And Avery, with the Environmental Finance Center Network, there is a Environmental Finance Center serving each of our EPA regions all across the country. And I encourage anyone with any utility that has questions, thoughts, concerns, anything dealing with rates, with finance, you have that resource there. There's also several other groups. If you look across your American Water Works groups, different sections, you have the U.S. Water Alliance. There are a lot of entities that are providing phenomenal resources when we think about rates and rate structures and financing of our public utilities. So I encourage any of y'all, reach out to these groups, these entities, and ask those questions that you may have, because to me that's what we're here for. That's what we do. But this is a very interesting time in I'm gonna say public utilities, water and wastewater utilities. We're on the heels of some water quality issues in some of our larger public utilities across the country. So we're working through those, and as we even see some in the South, this is where we start picking up these conversations about rates and about affordability. And I think all of y'all know, at the end of the day, we want to be able to cover cost to provide a good quality, whether it's water or wastewater utility, but providing it at a very affordable rate. And I will say this, we've seen, at least since the 70s, when there was a phenomenal amount of old farmers' home money that was pushed out to create a lot of public utility, public water systems and wastewater systems across the country. We've had really low rates. I mean, if you look at where they are compared to other just common household utilities, water and wastewater have been really low as far as the rate paid themselves. But we're starting to see, and I'm assuming any of y'all that are on the call or the training today, we're starting to see that these low rates are not always producing the revenue streams we need. So with today's topic, I'm really teeing up a lot of things, and I've modified this presentation from one this kind of an ongoing conversation. So this is part of a larger presentation. So I'm gonna say we're kind of hitting some high points. And Avery and I talked about this earlier. If y'all have any questions in any spot in here, please stop us and ask. Again, I've got a number of slides, and I want to work through them, but also want to be able to answer any questions, because we want this to be a useful tool for you. So before I get in, after the session, if you have anything, please reach out to Avery with the network, or reach out to myself. More than happy to help. To me, that is what we're here for. So again, I'm gonna cut my camera off, focus on the presentation, and we will roll. But thank y'all. Thank everybody for joining today. All right. Next slide, Avery. So, are your rates too high? Wastewater rate affordability and setting the right rates for your system. So, when dealing with this topic, when we jumped out there and wanted to do a training on this subject matter, with the number of rate studies, assessments that we do across the state and starting to branch out into the Southeast region, it's always a concern about where are our rates in comparison to others, as well as what is its impact on our customers. So this, to me, is something y'all may be asking yourselves, or may asking as you approach some type of entity that's doing a rate assessment for you. Next slide. All right, so looking at what we're going to do is looking at some revenue requirements, and a lot of these things you should be able to pull or look at from annual audits. Most utilities, whether they're a small community water system or a large municipality, they're going to have some type of accounting firm that does audits, annual audits, that helps them also prepare budgets. And these are very critical. You can look at these every year. And again, when you start looking at or using entities that will assess these for you, then you'll begin to see your trends, where your revenues are going, where your expenses are going, and even getting down into the line items of it if you need to. Then also, as far as the community's financial priorities, hopefully we'll touch on that. I've got a little example that we're going to try to work through. When it comes to the systems themselves, as best as possible, if you can predict, or at least try to look at where's the system going. Is it growing? Are we gaining more customers? Are we losing customers? And what is that customer dynamic? So thinking through that, and then building rates that fit your system, fit your system's needs. All right, next slide. All right, so revenue requirements. So really what we're looking at here is the money it'll take to operate your system and maintain your infrastructure. So, with the title of our presentation today being about wastewater, we want to think about that true operations and maintenance, and then the infrastructure, because from the water side, we pump, treat, distribute. That's a very simple, I'm going to say explanation of it. But from the wastewater side, we're collecting, pulling into some type of treatment plant, running it through treatment, and then we're actually discharging. So thinking about what does it take financially to maintain that infrastructure, everything from lift stations, manholes, lines, and then when you get to that treatment plant, you can really spend some money, no doubt, and especially as we're starting to see our permits limits changing, and we're trying to meet those changes. Again, ultimately, we want to have good quality water that's being discharged back into our rivers, lakes, and streams. All right, next slide. Okay, thinking about your biggest capital needs, if you haven't looked at your system and started thinking through projects, thinking through what are our needs, when we think about our biggest capital needs, a lot of times this is big picture, right? Let's kind of start. What's big? What are we looking at? What are we thinking? What are we needing? From a wastewater standpoint, movement of the wastewater through the system. So a lot of times when we think about lift stations, counting the number of lift stations, and also I'm going to say validating that you have, if you have dual pump systems, making sure both of those are working, because these are really critical to the system themselves. And then when you get to the treatment plant, there are several, I'm going to say several points within a treatment plant that are very critical to the actual treatment, because any one of them can potentially be a bottleneck to discharge, and you want to make sure it's continuing to move with the flow that it's designed to. So thinking about those biggest capital needs. So if I'm talking to board members like mayors, board of aldermen, or just board members themselves, usually your operator or your general manager or your contract operator, they should be able to give you a pretty good idea of what those capital needs are. Now, again, I may be talking to some general managers on here now that know what those capital needs are, and then it looks at, all right, how do we get the funding to do that? And again, I'm jumping ahead slightly, but when we think about that funding, usually you have debt, you incur some type of debt, or you're able to actually get some type of grants. A lot of it we're seeing in capital. We're seeing it in principal forgiveness, or you actually adjust the rates, have them appropriate. All right, next slide. All right, so how many of you have enough money to pay for those capital needs? Interestingly enough, I'm seeing some systems that actually do have reserves, that actually do have the resources to actually make those capital improvements. And a very kind of rough rule of thumb, when you look at your audits, if you look at the actual depreciation amount on there, when we think about what is potentially needed, that is a really good indicator of funds that may be needed. So in a perfect world, if I'm a municipality, I'm able to at least put that money back for future needs. Now that shouldn't be viewed as money to maintain it right now, because that's funds we'll need. But thinking about how much money do we need? I mean, we can throw out a lot of numbers, whether we're talking about cash on hands, and that's kind of your general operations, general maintenance from day to day. How much of that do we have? Adding on top of that, to me, depreciation, because I view that as a real number. This is something that if we can have it, it is great to have. And that, again, that is a kind of a growing number. Sadly, one of the problems we see with some municipalities is that you have a utility or utility board that is actually doing it as they should, and they end up with millions of dollars sitting there. And then you'll see a municipality that'll say, well, we don't think y'all need $5 million. We're going to take 4 of it and try to do something else with it. Well, the next time you need to work on your elevated tank or drill a well, and the bid you get from the engineering firm is $4 million, then you go, oh, well, maybe we did need that $4 million. Or if you're upgrading your wastewater treatment plant. Again, these are very large expenses, so we need to be very conscious of that. So if I'm speaking to any board members that aren't knowledgeable of that, I just encourage you to be conscious that everything with our wastewater treatment systems now in relation to other operations is very expensive. So we need to be conscious of those capital needs and then the funds that we're setting aside for it. All right, next slide, please. Okay, so just touching here, we'll look at the process, identify some costs and revenues, and then looking at some sufficiencies of revenue. Again, I've got some examples we'll look at, just kind of comparing one to the other. All right, next slide. So the objective of this financial planning is to ensure that the utility has the ability to obtain the sufficient funds, as we said here, to develop, construct, and operate, maintain, and manage its wastewater system in a continual basis. And this is, to me, very critical, in full compliance, federal, state, and local, because we definitely all know that we have federal from the EPA standpoint, and then state, whoever our state primacy is, and then even some, if there are some local ordinances or policies we need to follow. All right, next slide. All right, so I'm gonna say kind of too often we look at the finances, we look at the finances of our system and it's all about like right now, that's all that we're thinking about. Currently, whether it's this billing cycle or this year. And to me, when we look at, comparing that to like a household, you're kind of living paycheck to paycheck. And that really isn't how we should be looking at our water systems, our wastewater system. So we should be looking at this financing over time. So it's not just enough to think about today. We need to start preparing for the future, because as y'all heard me say, when we look at that depreciation amount, because that's realistically how much of value we may be seeing roll off from the lifetime of an asset. So with our systems, there's very few, if anything, that will last forever. So the day we buy it and put it into our system, it's got a life cycle. So at some point in time in the future, we'll have to replace it. So it only makes sense to be setting that depreciated amount aside. Okay, so we need to prepare. We need to prepare for these unexpected changes. So as revenues fluctuate, depending on, I guess, movement of people or weather, drought, wet conditions, whatever those may be, to me, we need to start thinking about them, or at least trying to prepare for them. All right, next slide, please. All right, so with the financial planning process, this will help us show whether we have sufficient revenue to pay for annual operations, maintenance expenses, capital costs, and these includes any funds we spend directly on the capital, as well as debt service, and whether we have enough funds to build up reserves. So as soon as we take out a note on, as soon as we take out a note just to maintain that infrastructure, we need to account for that. We need to account for that moving forward. All right, and it'll also show whether we can continue to have sufficient revenue over time. So with our current rates, do we have enough to cover costs this year, in 5 years, and what is our financial plan showing moving forward? And this, if you dial it back, what I was really talking about when you look at your audits, I usually will look at a 3-year window, but if you can look at any more, especially if you haven't changed your rates, if you have the same rate for the last 10 years, look at those audits and just look at where your movement, because a lot of times you'll see your revenue will plateau, but your expenses may increase. So it's good if you have data, from your actual revenue and expenses over the past years, and usually the more is better. But a good inflection point to look at is, when was the last time we had a rate increase? Because that's where you're going So unless you're changing your rates or unless you're increasing or decreasing your population, you may not see a change in that revenue stream. All right, next slide, please. All right, so let's look at the money that we spend every year. This may include daily expenses to run the system, expenditures on capital needs, debt service, and then money that you hopefully put into reserves. All right, so next slide. All right, so the first category we'll look at are operation and maintenance. This is what it costs to run your system each and every day. So what do we see as examples of these? What do you have in your system? Are you there? Yeah, okay. So when you look at operations and maintenance, payroll, repairs and maintenance. So the second bullet here, when we think about repairs and maintenance, I get to do, which I'm very thankful for, I get to do a lot of talks with our municipal officials. And one of the things that I say, and I try to give them peace of mind, whenever we're dealing with wastewater systems, whenever we're dealing with water systems, you will have repairs and maintenance. There's no question about it. It's not if, it's when. Like, it's going to happen. And that's not a negative thing. A lot of our systems seem to get upset, seem to get frustrated with infiltration, with aerators going down, lift station pumps going out. But that's the nature of doing business in this industry, and I think all of y'all probably see it. So, all right, I won't harp on that too long. So, moving down, it's important to note that here that payroll should include everyone that works on the wastewater system. If you're a local government, we should think about including clerk's time, town manager's time, budget staff. So your wastewater system should cover, a percentage of salaries of these employees who work on the wastewater system. If you can, do it in proportion to the amount of time they spend on the wastewater system. So if your clerk spends 40% of his or her time on it, then 40% of that clerk's salary and benefits should come from that enterprise fund. And then when we get into maintenance as an operation cost, means that you do you keep assets in a working order. Sadly, we see a lot of systems where the system received money, some type of funds from wherever, and they fix or repair what's needed, but then they never, I'm gonna say, adjust rates or get rates sufficient or get the staff that's needed. And then you look up 4 years, 6 years, 10 years down the road, and you're replacing or needing to replace the same asset that should have lasted 20 years or 25 years. So just, be conscious of that. All right. So when you project these costs over time, all of these different bullets that we have here, the easiest way is to choose an annual growth rate. So thinking about the I'm gonna say kind of the rule of thumb that I've seen the last 17 years in this business has been, 2 to 3%. Now here recently, last year, I think we ended the year somewhere around 8% maybe was the inflation rate we saw. So you need to look at your budgets and prepare for those. So because we saw, I know we did in the Southeast, we saw a tick up in expenses. So be conscious of that. Just be I'm gonna say somewhat prepared to try to prepare for that. All right. All right, next slide, Avery. All right. So just looking at this is a financial statement from a system. This system here serves just under 1,000 people. I think it's a good example of the list we just saw there. And you should really see all of your major categories of expenses. And this here actually shows how much utility spends on these items over a course of what we'd call a fiscal year. Now, and I'm assuming everybody, we do have calendar years, which January 1 through December 31. And then we have what's called a fiscal, and fiscal years may differ. A lot of your states roll from July 1 through June 30th. From a federal standpoint, a lot of those, if not all, run October 1 through the end of September. So we may have different fiscals, but usually if you put those in sequence, whether it's 3 to 5, we'll start getting that picture. It's always, in my opinion, good to have at least a 12-month cycle with whatever we're looking at, just because you can have fluctuation. All right, next slide, please. All right, so when we look at this relationship of operation and maintenance costs to our wholesale production, so when we start thinking about what changes based on production versus what doesn't change based on production. And this, I'm gonna say, I like to call this an old model, even though we're using it and we still use it today. And I think it, don't get me wrong, I think it works. But I would say if you want to explore, explore different rate structures, because there are some more creative ways, and I don't think I'll get into it too much, but some creative ways to look at our rate structures. And again, I'm for having properly, hold on. Yeah, click it. Avery, will you hit one, I think one more time? Yeah, there you go. Okay, so I'm for having sufficient revenue and having a optimal run system, no doubt. So when we think about these fixed versus variable pieces of our rate, and I get it, and I think all of y'all get it, but one of the big differences that I see with our public water and wastewater utilities is that no residential customer that's living in a house that is working out of it, living out of it, raising a family out of it, is going to stop using their water or wastewater service for a year. When it comes to consumption, there's a bare minimum that they're gonna use, just because you can't live without water. You physically cannot live without water. So when we start thinking about this fixed rate where we gotta have this revenue, to me, we sometimes paint this picture like people may not use it. So we say, well, we got to charge this, but we're going to give them, 2,000 gallons. But you are somewhat making the assumption that, well, people may not use water this month, so we got to make sure we get this fixed cost in there. And I just look at your numbers. Use a good outfit, do a rate study, look at your customer stratas and see what people are using. And I think it would surprise you to see that there are some good and some creative ways that we can still generate the revenues, and our lower consumers can pay a much lower bill. Okay, so I don't want to harp on that too much. Okay, all right. Next slide. I'm gonna jump into this.
Sorry, Jason, real quick, we have a question that came in.
Come on.
So they said they don't see many communities with depreciation in their O&M budget. How would you get them to include it?
They're not seeing them actually put depreciation in the O&M budget?
That's correct.
Okay. Well, if you are a community water system, they should be doing an annual audit, or they should be required to do an annual audit on the system. And whatever auditing firm that you're using should be able to account for that. And I would think they would already be accounting for that. So again, to me, I've only very small systems that may be doing a very minimal review just to get by may not include it. But yeah, I would encourage you to dig a little deeper with whoever is actually doing your audits for your system, and ask them to put that number or find that number, because from a tax standpoint, they've got to be depreciating the assets over the life of them. So again, my answer would be, I would encourage you, whatever auditing group or tax group you're using, tell them that's a number that you need to be able to see.
Thank you so much.
Okay. All right. Hit it again, Avery. All right. Good deal. Okay. So the next thing we think about big capital expenditures, things that we may spend money to purchase, renew, replace. Looking here, we think about pipe, pumps, valves, meters, vehicles on the system, different tanks, whether that's just dealing with treatment, treatment equipment, buildings. I've got SCADA down here. I'm a huge advocate for SCADA just because of I'm gonna say the time that it can save you and the quality of information it can give you literally at your fingertips. So if any of y'all haven't incorporated SCADA into your system, I encourage you. And even if you start small, just put some, maybe some probes in your lift stations, or maybe get your treatment plant connected with it so you can actually see what pumps are running and we have issues, seeing the flow, maybe have your oxidation ditches monitored. But I would just encourage you to look into it. And again, that's another I'm gonna say tool that there are multiple vendors out there, so do realize you have options throughout it, but that's something I would encourage you to look at. And then also when we look at all of these other items, pipes, pumps, valves, meters, especially that treatment equipment, tank storage, I would encourage y'all, you've got a lot of good industry. I mean, you think about the associations like National Groundwater Association, you think about WEF, you think about American Water Works. These groups have national conferences as well as regional trade show conferences. If you've got a general manager or if you've got any of your staff that are interested, I encourage you, go to these conferences where all of these vendors are, because that's their business. So when we think about wanting to get good products at a reasonable price, to me, that's how you do it. That's where you do it. Make connections with these different vendors so know what options we have and price these things out. I mean, that's, to me, that's where we are. There's a market for this, and there are a number of really good quality markets of vendors out there. All right, next slide, please. Capital.
Before we change notes, real quick, can you just briefly mention what is SCADA for the audience?
In short, SCADA is basically electronic monitoring of your facility, of your system. It's you're going to have to give me two. Let's see. SCADA. All right, so SCADA, supervisory control and data acquisition. That's what the acronym is: supervisory control and data acquisition. And I'm looking here, it says it's software applications for controlling the industrial process. So when we look at SCADA, SCADA is the term used for it. SCADA is a very good way. Again, it's I call it electronic monitoring for your system, whether that's water or wastewater.
Great, thank you for answering that.
All right, good deal. All right, capital improvement, general description. When we think about a capital improvement program, general description of each project, what's needed, identifying the years over which these projects may be done, costs with this construction, the rehab, and any operating costs that are anticipated once the project is complete. If you aren't doing any type of capital improvement program, I would encourage you to begin looking at that. When we think about municipalities, even when we start thinking about municipalities that may only be 10,000 people, And when you get larger, there is something to be looking at every year for replacement, refurbishment, whether we're looking at growth or going up or down in size. So there's a lot. There's a lot that can be done through capital improvement, and to me, it's one of those that's an evolving product. So whether you start this year, I mean, to me, I encourage people to look at it every 3 months, every 6 months or so, not just pick it up once a year and try to take off. But again, there's a lot of pieces that go along with capital improvement programs. Looking at the system, a lot of it's going to depend on the size of your system as well. But I encourage you to look at that or get your general manager to get in there. All right, next slide. So how do we pay for our capital improvements? I got 2 more. Yeah, there you go. So you can go pay as you go. So when we look at the general operations of the system, if you've got the capability and your rates are set at a certain level where you are generating the revenue to do it, you can pay as you go. You know, what I've seen in some utilities, municipalities, they'll set, you know, their capital improvement budget. They'll have a line item, and whether it's, you know, 20,000 or whether it's 10 million, you know, each year they're planning on putting that into actual capital improvement, and that's based off their revenue stream from their users, from their customer base. The second you see on here is debt. Sadly, you know, a lot of what we've seen is systems don't adjust rates where they need to be, and they don't have active capital improvements or routine maintenance plans. So you end up with a failing asset, and then you have to turn around and borrow that, you know, 200,000 or 20 million to do a project, and then you have to end up backing into your rate to actually pay for that. But debt is one of those things that we can use with our systems and with our infrastructure improvements. Capital reserve, so if you are able to actually run your system, taking care of the daily operations and maintenance, funding some type of debt service, and then still have some money to put into capital reserves, this is where you would dip out of. And again, that is going to be needed. Sadly, we do see a lot of systems that run from paycheck to paycheck. So when they do need money, they don't have, and they have to borrow it. So I would encourage y'all, you know, let's look at setting our rates at a level that allows us to pay and allows us to meet our reserves. All right, next slide. I'm not going to stay on this too long, but this is just when you're looking at, you know, funds, sources of funds coming in, outlay. And I'm just thinking about debt. I just want to kind of show this bill. Let's just go to next slide. All right, so when we think about debt service, you know, this is annual principal and interest payments that a utility pays to service its outstanding debt. And then we think about debt reserve, so it's required money in the bank to cover debt as security against revenue shortfall. So depending on who you may acquire debt from may determine that debt reserve amount. Again, whether you're with, you know, local bank or you're with USDA rural development, those numbers may differ, but usually they're in a similar, they're in a kind of a similar vein. So I'm gonna say you have to promise to keep percentage. Yeah. Cushion to payback. I'm seeing what I've got here. So usually what it says, about 10 or 30% of the annual principal and interest payment. So whatever, you know, if you're paying $10,000 a month in principal and interest, you know, they may ask that you have 10,000 or 30,000 actually in debt reserves. So just be conscious of that as one of those pieces. All right, next slide. All right, so other reasons for reserves, we think about cash flow fluctuations, emergency repairs, replacement, phase-in rate increases over time. All right, so when we think about the cash flow fluctuations, the first step to help when revenues are not as high as they need to be, you know, we could see a seasonal fluctuation. Your customers In the wintertime, may use less, which correspond with less revenue from the water and wastewater side. You'll see that revenue go down. But a lot of times your expenses may not necessarily change. So we may actually need reserves for those, I'm going to say, those leaner times. Then when we look at emergencies, and I'm going to say we're all going to have them. So we need that money in the bank. So to me, it's basically like an insurance policy to help us through national disasters, any type of lagoon failures, tank failures, lift station failures. You have a wastewater main get hit, allowing a lot of infiltration. You need to get that repaired. So just thinking about that emergency piece of it. And then finally, we think about rate increases. If your rates have to go up, you may want to raise them. You may not want to raise them all at one time, because it can be hard on customers, especially depending on the time of year that you're actually trying to raise those rates. So if you're looking at a rate increase, especially if you're getting into the summer months, to me, I encourage people to wait, usually until the winter months or close when you may have less consumption. That way you can kind of ease it in. But if you're needing the funds now, but you're actually wanting to rate, sometimes you may need those reserves to kind of backfill or hold you off. All right, next slide. Okay, so I think we can definitely get through revenues on the with our time we've got. All right, so we've been talking a lot about our expenses. Yeah, just keep it right there, Avery. So we've been talking a lot about expenses. Now let's look at I'm gonna say kind of the revenue side of it. So rate revenue we look at includes the funds received from the customers for that wastewater service. So in other words, the primary source of our revenue for most utilities is from these user fees. So all right, so first, what we typically see is the fixed charge for that billing period. And this is what we charge customers basically for having an active tap and being tied to the usage. And the second that we typically see is our variable charge, and that is almost exclusively tied to usage or some type of volume. All right, so to project the fixed charge over time, you need to understand if you're gaining or losing customers. And to project the variable charge over time, we need to understand how our usage is changing. To me, we also need to know what percentage of customers pay you on time and pay you in full. A couple other small pots of revenue you can think about: connection fees, penalties, interest, and others. But again, digging in with this fixed and variable, I always encourage people to look at your customer stratas and see what different stratas. And when I say customer stratas, we're talking about the active customer using from 1 gallon to 1,000, 1,001 to 2,000, 2,001 to 3,000, at least up to 5. And some points we can break and go 5 and above, or we can go 10 and above. But just thinking about your volume that's being used, because sometimes we have very high fixed minimums, and we look and we have a very small amount of customers actually using it, and that's usually you're either lower income or elderly. So again, as a result, their effective rate, so like cost per thousand, is really high. So what we are realistically doing from a financial standpoint is we're charging them more per thousand versus the family or the business that's using 10,000 gallons, because then their effective rate essentially goes down per thousand. All right, I don't want to get too much in that. So next slide. All right, so kind of pulling it together, we'll look at, you think about a 3 to 5 year span, projecting your operation and maintenance expenses, project what you'll spend on capital needs, debt service, depending on how much money you need to put into reserves, then project revenues based on your current rates. So once you have all this information, put it together, in a spreadsheet if you can. It should look like a budget that I'm gonna say you project over time. So you look at what are we gonna spend on O&M, what will we spend on capital, what will we spend on debt service, what do we need to put in reserves, and then that is your revenue requirement. So then we put it, we look at this anticipating our reserve revenues for the same time period based on the current rates. So you can just make assumptions, or you will make assumptions that your consumption, your customer consumption, will either stay the same or change depending on the increase or decrease of customers within your system. So this should start helping you see, where's my system going, where do my revenues need to go, and are we meeting that, or will we meet it with the current rate structure, or at which point do we cross over and start going like in a negative direction, or either operating ratio get below 1. All right, next slide, please. All right, so the last step is to do the math, based on the current rate structure. Do you have enough money to cover your revenue requirements over time? So the bottom line of the financial planning process is literally, the bottom line. So we're just seeing what we're projecting out based on those previous points stated, and based on our current revenue stream, based on our current rate structure, do we have a sufficient rate? All right, next slide. All right, so if your revenues aren't sufficient, this is a very critical piece to think about. Oh, and I've listed here, try cutting cost first. You will hear, if anybody goes into this discussion with a community, with a system, we think about increasing rates. And yes, don't get me wrong, I think we probably all need to do it somewhere. But also, let's look at expenses. Are there any things we're doing, any activities we're doing that can be either stopped, that can be replaced with something more efficient? What are those? Because your customers will call you on that, and you all know this, and I'm speaking very anecdotally here, but they'll look at 5 guys standing around a manhole, staring down in it at the one dude in the bottom of it actually doing some work, and they'll think, all those people do is stand around. But the John Q. public doesn't realize that work crew has been out there all night because they had a clog that was backing up wastewater all through the system, and here it is 8 in the morning, and they've been up for 7 hours. So a lot of the customer base doesn't know that. And again, that's another subject we'd get off on. But to me, just being conscious of our expenses, because usually your customer base, they would rather see you cut your expenses, cut your costs, keep the rates the same to meet your financial needs versus going up. I don't want to get off on that soapbox too much. But anyway, try to cut costs if you can, but look at that. But it is very, very, very important to maintain compliance and I'm gonna say your level of your quality of service. Because what you can end up doing is get into a very, I'm gonna say, very backwards loop of if you start to get out of compliance because of revenue shortfalls, you end up truly needing more revenue in the end to maintain compliance, to build out whatever that may be to get you back in. But also, if you start cannibalizing positions within your system, then you start decreasing this level of service. So sadly enough, we get in this downward, I'm gonna say, spiral of trying to maintain compliance, trying to maintain a quality of service. We get to a point where our customers don't have faith in the system anymore. Then they don't trust that whoever's managing the system can run it right, can run it properly, can run it efficiently, can run it ethically. So once you try to steer that ship back in the right direction, people don't have faith in the system, so they're not really willing to pay more when they've seen this system go down. So it's very critical. Let's not hit that slippery slope. All right, so next slide. So when we think about, we're going to look at, are we stuck in our current rate design? So we see a lot of places that keep the same rate design, And I'm sure nobody on this meeting today has ever heard folks say, well, that's the way that it's always been done. I'm sure nobody's ever heard that. So once we understand that what the revenue requirements of the system are, we can find a rate design that best reflects or best meets our community's objectives, community's needs. So in a second, we are going to try to look into that. I hope we have time to get in there. All right, but just being conscious of that. All right, next slide. All right, so when we think about our community objectives, where are we? What are we needing? I think I can get into the next. All right, next slide, Avery. All right, so objectives here, we'll look at kind of a rate design. We'll look at some key data, interpreting the data for the utility and the customer base. So there's more to a rate design than just understanding the cost of service. So we're going to describe some objectives on rate setting, identify where we can find some key data in the water system, and then hopefully I can get to the point of interpreting this data for the utilities and the customer base. All right, next slide. So when setting rates, what should you care about? What's important? So think about the times you've been through the process of setting your wastewater rates. So what should we care about? What's important? So we think about, so is affordability an issue? Is there any conservation issues? Are we trying to establish a capital improvement program? Do we have any commercial accounts? So there are a lot of things that we actually can think about when it comes to setting the rates and what is important. And I'm repeating myself, but I'm doing that on purpose. Use these outfits that do rates and rate setting all the time, because that's their strong suit, and they ask these questions right here to really dig in to help you set a really good, really effective rate. All right, so next slide. All right, so objectives to rate setting. So the first objective, we're looking at revenue sufficiency. So do the rates cover the cost of providing wastewater service? So that collection, treatment, discharge. So this is what we're calling this revenue requirement, and that is the cost of providing the service today and into the future. So without revenue sufficiency, the system won't be financially stable. And this is very important to any type of lender that you may see or interact with or look to get any type of funding. But it's not the only objective. It is not the only objective. All right, so when we think about, I'm going to say stability, so the majority of costs that don't change based on how much wastewater we collect and treat and discharge. So we think about a lot of our revenues is tied up. It can vary depending. I'm gonna say it can vary depending on the season, weather, the economy. So revenue stability is about, I'm gonna say, reducing the volatility. So we look at usually, we do this stability or try to do this stability by having a larger base charge, which is not actually tied to usage. I'm not 100%. I'm not 100% sold on larger base charges to increase stability. We'd like stability, but again, I'm under the impression, and as we move forward, and as we are seeing new rates come about or new structures come about, we are realizing, yes, there can be volatility throughout the year with a system, but at the end of the day, people are still going to use water, which correlates directly to our wastewater consumption every month. It is there, and we are going to see it. All right. Next, we think about simplicity. Let me say it like this: the more complicated a rate is, it's not necessarily better. Any of the utilities that have used us for rates or rate studies in the past, I like to simplify the rate as much as we can. I mean, We just did one study where a municipality had absorbed, I think, about 4 other rural associations. So when we came in, they literally had 5 different rates. They had the municipality's rate, and then they had the rate and rate structure for the other 4 systems, which, I understand you absorb a system, you don't want to change the rates. But at the end of the day, now you're all one system. So it doesn't make, to me, good, fair, equitable sense if, citizens that are all in the same town but different one road to the other are paying different rates for the same volume of water. All right, so then we get to affordability. This is about being able to pay for enough of this water and wastewater to live on, keeping the wastewater service affordable to customers. All right, let's go next slide. So, all right, resource efficiency, legal, consistent with cost of service principles, fairness. We've had a lot of discussions lately as a lot of state legislatures are coming into session about some of these terms. When we think about efficiencies, when we think about fairness. So when we think about resource efficiency, that's just another way of really talking about conservation. Where are we from a conservation standpoint as far as usage goes? Legal, to me, that one hopefully should be self-explanatory. Cost of service, I'm gonna say, kind of ties back. To me, it's all about that. Those who use the system should pay for the system, and looking at the proportion of cost, they propose on the system. Rate designs consistent with a cost of service principle are easier to defend and easier for the public to support. And if you recall my discussion about higher base rates, which can mean you have a higher effective rate for your low-end users, and then you have a lower effective rate for your high-end users. So just being conscious, of that. And then lastly, with fairness, to me, that's very hard to define. That can be somewhat of an arbitrary term, because a lot of times fairness is with whoever's trying to determine it. But communities should define for themselves what they mean by fair, especially when they look at that rate design, in order to get, in my mind, in order to get public support truly for it. All right, next slide, please. So some objectives with rate setting, there can be some trade-offs. When you contemplate rate design goals and objectives, it's important to understand that there are trade-offs, or there can be trade-offs between goals and objectives, because some of the goals may be, they may not be necessarily tying in with the true objectives of the system to maintain compliance and service. All right, next slide. When we think about, competing objectives. All right, so some potential, conflicts that we may see, wastewater systems that may promote resource efficiency, then they may struggle with revenue stability because of customer usage patterns, which relate to the revenue, which may mean it's less stable. Also, the best way to promote conservation may be to price the utility, I'm gonna say, at a level which make it, which as a result then kind of makes it less affordable. I'm not a huge advocate for trying to price people into consumption constraints, again, because when we think about water and wastewater services as utilities, it's the one needed utility. You can't work without it. You can't live without it. You've got to have water. All right. Okay. So rates for a small system may be high, for revenue sufficiency, but that can make the rates unaffordable for low-income users, which we can see that. And then for revenue stability, some of these smaller systems, may need to charge a higher base rate, And then as a result, all customers are paying every billing period for just being customers. But again, this ties back into having, a higher effective rate, which when we think about our lower end users or lower end customers, you may have higher water bills, which may make it somewhat unaffordable. All right, next slide. Let's see how far I can get here, Avery. Let's see where I am. Okay, let me get through these next two. So objectives to guide the rate setting. It can be difficult, but yeah, as I've listed here, it's not impossible. It can be difficult. It's not impossible to achieve all the goals and objectives in one rate design. Again, where we are now in pricing of water and sewer utilities, I still think majority of the places that we see, I still think we're at a very affordable rate for these utilities, in my mind, based on the importance of them. So again, when we start coupling in our goals and objectives, I think we can meet them. So not all of these systems are going to care about the exact same things. So when we think about resource efficiency, that's going to differ depending on where you are geographically. Different billing software is going to let you, I want to say, kind of have more of an ease of administering rates across your system. And again, I encourage all of y'all to have good billing softwares where you can adjust your rates accordingly if you have, or if you want to do that for different customer stratas. Let's go next slide here, Avery. All right, so when we think about which objectives, it is up to the board, it is up to the leaders of the wastewater system to figure out which objectives are most important for your community. So how do we know which ones are the right ones? And I'm gonna say a lot of that ties back to, going through the process and having, stakeholders involved, board members involved, and walking through the system. So we learn, for one, what those are, but we also need to know the cost of running the system. So we have the current rates for the system, and we can project what our expenses may be and try to make that rate account for that. And again, I'm repeating myself on knowing your customer base, knowing your customer stratas, and getting as much information as possible. Now, Avery, we're at the 1 o'clock hour, and I would almost rather stop here, and then knowing, because in the handouts, the participants would have the examples for the community that we would walk through.
Yeah, that is fine with me. And like you said, the slides are available, and we'll be emailing them out afterwards as well.
Yeah, and so I would say this: I would encourage y'all to look at this. We've built this example out and used it because it actually walks through two just sample communities. I list Bobo and Rena Lara. These are little small towns from where I grew up. But again, the numbers are real. The name of the towns is not. But this is just a comparison, and allows you to just compare utilities, and you may fall in one or two of these buckets, but also looks at how you would do kind of base rates, variable rates. So again, those are available for the rest of this slide deck, which y'all have. And again, there's 20 more slides, and y'all have to pardon me. I've never been accused of talking fast. So are there any questions for me, Avery?
There are two questions. I'm thinking one I'll will follow up with afterwards, but
okay.
One that I think might be helpful for everyone today is if we have any recommendations on professional groups that would perform rate studies, which, correct me if I'm wrong, Jason, but I believe the Environmental Finance Center Network does offer rate study assistance as part of their technical assistance.
Yeah. And I'm a little biased because, for one, we're working directly through the Environmental Finance Center Network now. So regardless of where you are in the country, look up, and Avery can provide the web address in the chat for the Environmental Finance Center Network. And we've got a center in each of the 10 EPA regions. And if you contact that group wherever you're located, that is what we do. I mean, that's what we do all across the country, and it's a service to you as a utility member through our support, I'm gonna say, of EPA, or through our support from EPA.
Thank you so much. I think that's all we have time for today. And like I said, if we didn't get to your question, we'll follow up with you via email afterwards. So thank you, Jason, for sharing your expertise with us today. And following the webinar, all attendees will receive a follow-up email with the slides and a link to the recording. After this session, there will also be an evaluation that'll automatically pop up. So it'll really help us out if you take that evaluation and let us know your thoughts on today's session. Yeah, thank you again. And Jason, do you have any last remarks for our audience today?
I don't, just other than, hey, thank y'all for attending. And if we at the Environmental Finance Center Network or Mississippi State University can be of any assistance, again, you can reach out to me or reach out to Avery. She'll touch base with me. That's what we're here for. So thank y'all.
Thank you so much and have a good rest of your day.
All right. Bye now.